Morning, afternoon, everyone. Tim Canham here from Sydney. It's great to be able to present to you today on what's a very topical thematic in the markets. Just next slide, thanks. Just wanted to introduce us, put some faces to names. We currently run about $1 billion in small and micro caps. Wick and I are the portfolio managers. Justin, our young analyst, joined us a couple of years ago. Wick and I have been running these funds for about 11 or 12 years now. So we've certainly worn the scars over many years. I started with the products in 2002. Essentially, we run two products. One's a Future Leaders Fund, which is a mid-cap, small-cap type product, and the other one is a Developing Companies Fund, which is micro-cap, which we generally invest in companies with a market cap below 500 million when we make the investment. As Tim mentioned, first Sentier is quite new. We were formerly CFS GAM, and the business was taken over by Mitsubishi Bank not that long ago, and so we're a independent and specialist investment management firm now, which is fantastic. Not part of the bank. Next slide, thanks. This is where you can find us on the website. You can certainly look at our products, and we do monthly updates, and like most other managers. So we'll just go on to the next slide. Just a quick one on philosophy, because I know we just want to get to the clean and green piece of the prezzo. What do we look for in companies? It's quite simple for us. We're very focused on capital and returns on capital and the balance sheet. That's key, especially in really small companies, because when things go wrong, they tend to unwind very quickly. So balance sheet is key. Also, a lot of these companies, as they'll attest the later presentations, it can be difficult to get bank funding and capital. So they're very reliant on the equity markets. So strong balance sheet, strong management teams. We like co-investment of management teams. We've typically invested in companies that have got a large shareholder, founder, family, for instance, and we like that sort of co-alignment of interest. But we also like earnings, and not just earnings growth. We like predictability and visibility in earnings. A lot of our smaller companies have been around for long periods of time. Just because they're small, it doesn't mean they can't be very profitable. So that's one thing we do look at closely. Next slide, please. I won't go through all of the slide, but as I've said before, we're a co-investor. And the way I look at microcaps is we're basically one step above venture capital. So people often ask me what I do, and I say, look, the funds are for a specific purpose. They're here really to provide, obviously, returns for our investors, but we play a key role in the capital markets. And for companies to come to market and raise equity, we're a pretty good destination. And as I'll allude to in the next few slides, we're very patient. And these sort of projects, you need patient capital. You don't need fast-moving capital, and that's why our funds are sought after by many companies and investors. Next slide. Bit of promotion, but we've seen a lot of cycles. Wick and I, that chart probably represents my heart rate sometimes, but we've seen the GFC, we've seen the Asian debt crisis, we've seen European debt crisis, tech bubble. Number one, we've seen obviously COVID in recent times, and look, there's hope on the other side. And our funds recovered very well last year from the downturn in March, and we're very optimistic on the future for a lot of our stocks. Next slide, please. So here's really what we want to talk about is the clean and green theme. A year ago, this was a very lonely space. I've got to be honest, it was very difficult to get funding for a lot of projects. I mean, you can see that in the share prices of some of the lithium stocks. I mean, things like Pilbara Minerals and these things were on their knees 12 months ago and 18 months ago because the lithium price was very weak. Graphite was under pressure. Nickel, all these commodities were under pressure. So roll forward a year, and it's amazing how things change for the better, I think, because a lot of these projects should be getting good investor interest and getting banks involved in helping to fund them, not just equity providers. Basically, the thematic we've chosen to tackle this is obviously Australia's a mining country, and we've approached it from very much bottom up, i.e., what are the battery minerals that are required to go into this clean green theme. We focus on lithium, nickel, graphite, and copper. So this is the difficult part of this job is particularly in mining. You need to be very patient, as I said before, and we've got to ensure that these projects get up and running. I mean, if you look at a lot of the supply demand charts, which I've got up following this slide, they rely on this supply coming on, and that's very important to meet these demand profiles that we're seeing out of EV and renewables. Some of our key investments, I think a thematic that's taught me a lot in under COVID is travel, and the fact that geography when we're picking a stock is very important. So the thematic in a lot of our stocks is they're basically all based in Australia, and Australia is a good mining destination. So if I look at a company like Independence, which is quite a big stock and is our largest stock in our Future Leaders Fund, I can speak to Peter Bradford, the CEO. I've been to their Nova nickel mine in WA. I've been underground. I've seen their solar farm power solution. I've met their safety people. I know that it's a very well run operation, and I can go and see it. Now the WA borders are open. I can go and see it. I can kick the tires. Aeris Resources is copper and gold. The copper mine is in New South Wales. That's what I've learned in COVID. I mean, last week we were offered a meeting with companies that are trying to mine lithium in the DRC. We can't possibly put our investors at risk, particularly in a geography which is very unlikely we're going to be able to travel, kick the tires, see what the mining methods are. So we pay a lot of attention to this, the geographic jurisdiction. What I want to also stress is don't backfill your process with a thematic of clean and green. Do the fundamental work. One thing about this job is you've got to do a lot of reading. There's a lot of information. That's why it's difficult to do all this in 10 minutes. But that's what we try and do. We visit sites. We speak to management, particularly in mining. How are you going to fund it? What's the grade? What's your environmental standards? How do you look after your people? ESG, I often say the S is social, but it's also safety. That's really important to us. And hence, we like to be able to kick the tires, go and see these operations. So what you won't see from us, at least in the next little while, is a lot of investing in offshore projects. Because of that, I think our investors expect that sort of due diligence, and that's how we're approaching it. So important, do your fundamental bottom-up work, value companies properly, and do the work. Just have a look at the next slide, please. Yeah. I thought this was pretty interesting. Basically, it's saying if Tesla is to get to 20 million cars, what sort of production growth do we need in the key minerals? And you can probably see at the top, graphite's quite a big one. Nickel's a reasonably big one. Lithium, much big one. Thing about lithium, though, it is relatively abundant, but the projects have to be funded. So while it's abundant, it's not easy to process either. Neither is graphite. Nickel's quite a small market. There's been a lot of volatility in that market recently, which I think is very important. Where is the nickel coming from is a key question that we ask. And whether it's coming from jurisdictions that don't have strong mining codes, environmental standards, it's not going to be of interest to us. And I think what I learned in 2017, I did a trip to Germany, and a lot of the car companies we spoke to, VW, and this is a few years ago, they couldn't really tell me where their battery materials came from. And I was quite astounded by that. And roll forward 2 or 3 years, that's changing. And using the Philippines or New Caledonia or Indonesia as an example, it's probably not good enough coming from some of those destinations where they need to pick up whether their environmental and mining standards. So at the moment, we'll stick to Australia for our nickel. But next slide, please. This is basically a penetration slide from UBS. I thought it was very interesting that it's basically with the current materials, what sort of EV penetration can we get to? So obviously with Tesla talking about nickel, this is why there's not a lot of it certainly in grade. As you find with most materials globally, like copper and nickel, grades are falling, mines are getting deeper, and they're in difficult jurisdictions. So that's going to be very positive, we think, for commodity prices across the board. But also this responsible, I can't stress enough, responsible sourcing. I mean, you look at cobalt there. You all remember the furor around cobalt mining in the DRC. That's very important. Where do we get our cobalt exposure from? Independence, Nova in WA. We know where it's mined. We know who mines it. We know what the standards are safety-wise, and that's a big tick for us. Next slide, thanks. From the big guys themselves, BHP, Nickel West, EV demand is going to drive nickel strongly. Hence, we're pretty well positioned in nickel stocks, despite their volatility recently. Next slide. These are basically informational. This is where battery technology we think is going, and the green is nickel content in batteries. As we move to these more newer generation batteries, NMC 811, which means 80% of it will be 80% nickel. So hence we're pretty positive on the nickel market, as I said. Next slide. Thank you. You'll see a lot of these slides like lithium, graphite. Basically, demand is strong, and this includes current projects plus probable and possible. So supply needs to come on. So investors like us and our colleagues and competitors need to step up, as do banks. So it can't just be all equity funded. So next slide, thanks. This is basically, I started my investment career at the beginning of the commodity boom in 2002. That's where copper got to in that period when China was starting to grow strongly, and there wasn't enough copper supply around, so the copper price did ramp. The green line is there where we're at the moment. So we think copper's got a long runway as well. Next slide, thanks. Once again, just another thematic here of supply not currently going to be able to meet demand in some of these commodities, and we think we can't not be positive on some of these metals. And that our commitment to responsible investing, and I think that's what we do. Responsible sourcing as well is key. So with that, that's all I've got to say today.
Thanks, Tim. Just a question: how important are ESG principles in your investment mandate? Do you see, some of your institutional clients demanding more of that from your investment mandate?
Yeah, definitely. I mean, look, we're not an ESG fund. Well, our fund was set up in the 90s, but we take it very seriously. I'd say at the moment, we're about 20% of the fund is in what we would call ESG or clean and green theme thematic stocks. We're not invested in casinos, and we do filter out a lot of these sort of industries that we don't find attractive anyway. So, but yes, it's certainly going to increase the thematic. There's no doubt about that.
And there's obviously a rush to supply these clean battery manufacturers for lithium, for example. How important is funding, the government to support these sort of industries, and or the role of banks? Are banks playing a role as well?
Yeah, banks certainly are. Well, they weren't 12 months ago, I can tell you, because they were a lot of these companies were relying on equity funding from people like us. But I think what's been really good, and it's probably understated, is like the federal government, as Simon will talk about soon with GenX. I mean, they've committed a big NAIF loan for GenX to build their project, North Australia Infrastructure Fund. So the federal government is putting their money where their mouth is. You know, I mean, I think a lot of people talk green. It's a matter of when the rubber hits the road, how much have you invested? And that's what we're proud of. And look, it's not easy. These are early stage, some of these companies, and they can be very volatile, and you can make it look stupid pretty quickly. But we strongly believe in this thematic, and it's our role to help it make it happen.
And as you know, there's some comments by Morrison on where is it here on critical minerals sort of value to our industry. Do you see us actually manufacturing at some point? I know it all gets shipped overseas.
Yeah, well, you'll see that with Howard. I won't steal his thunder with EcoGraf. Is that yeah, we're gonna bring a lot of these things onshore. I mean, not everyone knows that spherical or battery grade graphite basically is all manufactured in China, and it's a very dirty process using hydrofluoric acid. So EcoGraf, that's why we like the company. A bit of a plug. It's going to be a clean and green graphite processing facility. You know, one thing that does worry me is that there's going to be a lot of batteries around, and these guys also have a recycling play. So that's going to be very important too.
Thanks very much, Tim, and it's great to provide an introduction to our company today. So EcoGraf is building a vertically integrated battery anode materials business, and that's all centered on our unique EcoGraf graphite purification process. This is a process that we developed through extensive test work, both here in Australia and also in Germany, and that enables us to produce HF-free, high quality, cost competitive battery anode material products for the lithium-ion battery market. So our three key businesses as part of EcoGraf are the battery products business, where here in Western Australia, we're planning to commence construction later this year of our first battery anode materials purification facility. Related to that is the recycling business, where we've successfully applied our unique EcoGraf purification process to purify and recover carbon anode materials from both lithium battery production waste and also end-of-life battery anode materials. And the third element of our business is the natural flake graphite business, where in Tanzania we have a development-ready, long-life, high-quality natural flake graphite mining operation, whereby we're currently finalising financing arrangements and intend to commence construction hopefully later this year. Next slide, please. Our board and executive management has a blend of technical and commercial expertise and deep experience in developing and operating mining and mineral processing operations in Australia and internationally. We have a very global strategy, so we have a head office here in Perth. Our first purification facility is planned for the Kwinana-Rockingham Strategic Industrial Zone just south of us here in Perth. In Germany, we have an office and a pilot plant facility where we undertake all our testing programs with battery producers and electric vehicle manufacturers. And in Tanzania, we have a portfolio of natural flake graphite projects. Our market capitalization is just over 300 million. We have a range of shareholders. So we have a listing both on the Australian Stock Exchange and the Frankfurt Exchange. And through the Frankfurt Exchange, we've attracted quite a range of European investors. So JP Morgan Nominees now holds just almost 22% of our company. And that in turn is a holding for the European investors who are participating on the Frankfurt Stock Exchange. First Sentier, Tim and the team have been wonderful supporters over the last few years of our business. They hold a substantial interest of 8.6%. And we've recently completed a major fundraising whereby we've attracted the support of Allianz Global Investors and Paradise Investment as substantial shareholders. And that raising in turn fully funds us for the construction of our facility here in Western Australia. Next slide, please. So there's a compelling lithium-ion battery market opportunity for us. So graphite is basically the material that is used to construct the anode in a lithium-ion battery. And by mass, graphite represents about 50% of the battery material. All of the battery material is currently produced in China, and it uses a hydrofluoric acid in its purification process. So we have an opportunity here to using our unique purification processes to establish the world's first battery graphite purification facility outside of China, and to provide a cost-competitive alternative supply to the existing Chinese production. So all of that demand for lithium-ion batteries is being driven by the global transition to electric energy and to e-transportation mechanisms. And we're seeing the massive take-up of electric vehicles that is planned. So that in turn is forecast to drive a growth of some 700% over the next 4 years in the requirement for natural graphite and purified graphite for lithium-ion batteries. Next slide, please. So in Europe, you can see an unprecedented level of new investment whereby they're establishing an entire lithium battery market from scratch, a battery market that the EU Commission forecasts is going to be worth something like 250 billion euros a year by 2025. So almost on a weekly basis, there are new announcements around battery capacity planned for the European region, and we have a major foothold in that region. And these plans that you're seeing around the capacity being established in Europe really underpins our strategy to focus on Europe and North Asia. And we already have an established long-term relationship through the major German industrial trading group ThyssenKrupp, through which we're undertaking a range of testing programs with battery manufacturers and electric vehicle OEMs in the European market. Next slide, please. So Europe in turn is also a leader in promoting sustainability in their battery mineral supply chain. So just recently they've announced a number of major changes to the regulations around the battery supply chains, and there are 4 key elements to that. There's responsible sourcing, carbon footprint technology and labeling through the supply chain. There's traceability using blockchain technology, and there's the requirement for increased recycling in terms of the ultimate goal of trying to establish closed loop battery ecosystems. Next slide, please. So this all underpins the establishment of our first facility here in Western Australia. So we're planning to commence construction later this year. That will take around 11 months, and through that we'll deliver 5,000 tonnes per annum of high purity battery graphite for lithium-ion batteries. After a short commissioning period of 3 to 6 months, we'll then proceed to expand that facility to 20,000 tonnes per annum. And all of this is based on the EcoGraf HF-free purification process. We've undertaken extensive feasibility and engineering works with GR Engineering, and we're in the process of finalising construction and operation arrangements with that company as well. So all of this has occurred over the last 4 years, whereby we've initially identified the process through work here with GR Engineering and CSIRO in Australia. And then we took the purification process into Germany and optimised and refined that through the expertise of Graphite and others in the European market. We also successfully applied our purification process to a range of natural graphite feedstocks, and that led us to signing arrangements with Technographic for the supply of our feedstock material for this West Australian facility. In turn, we've signed long-term offtake arrangements with ThyssenKrupp in Germany for the sales of our products produced here in Western Australia. And that has brought in the significant support from the Australian government, whereby we're in the final stages of negotiating a $35 million debt facility, which will underwrite the expansion of the plant here in Western Australia. As you can see there, it's quite a modest capital cost, initially 23 million US, and then an expansion of 45 million to take us to 20,000 tonnes per annum and highly attractive economic returns. Next slide, please. So this gives you a bit of an overview as to how the facility here in Western Australia will look. And if you have an opportunity, you can go to our website. We have a number of videos there that go into the facility in far more detail. But in essence, it's a very modular approach to the design. It uses existing equipment in a unique way for our purification process, and it's readily scalable as we expand from 5,000 to 20,000 tonnes per annum. We've also received extensive support from both federal and state governments. We had the State Premier, Mark McGowan, open our land facility down in Kwinana, where we secured 6.7 hectares for our production site. And more recently, we've received major project status from the federal government in recognition of EcoGraf's contribution to helping establish Australia as a central battery minerals processing hub for the global black battery industry. And also we're thinking about the longer term as well. So we've also commenced planning on site selections for a second facility in Europe. There are a couple of countries where we're in close conversations with parties around identifying suitable industrial sites, and we'll have more to say about that in coming months. Next slide, please. So the second pillar of our business is the battery recycling business. And the market to date is focused on the recycling of the cathode part of a lithium battery. And what we've been able to do is work with a number of battery manufacturers and electric vehicle manufacturers to test their anode materials that are produced either through production scrap, which is wastage that's produced as a result of manufacturing a lithium battery, or through what's referred to as black mass, which is really the carbon anode material that's produced after the hydrometallurgical processes have recovered the cathode metals. And what we found through that process of applying our purification to those materials was really an outstanding set of results. So in terms of our production scrap, we can recover that to beyond 99.95% carbon purity, which in turn is the required threshold for using that material back into the production of a lithium battery. And similarly on the black mass material, which initially starts as a much lower carbon content, we're also able to purify that successfully up to 99.8% purity, which in turn opens up high purity graphite markets. So this all provides us with a great opportunity to pursue a recycling business as part of our graphite production and purification. And in turn, we'll look to support our battery manufacturer and electric vehicle customers through lowering their carbon emissions footprint, given that the battery consists of 40% of the carbon footprint of the manufacturing arrangements of an electric vehicle, and also reducing their production costs, which is a key objective. And next slide, please. So we're uniquely positioned now to recover and reuse this carbon anode material, and the results that we have put out into the market and the conversations that we've had have led to very strong interest amongst players in the battery sector. And in turn, we've signed our first agreement with Korea's largest lithium battery recycling group, Sungil High-Tech. And that in turn is leading us to commence engineering design works for the construction of a modular pilot plant to be able to commercialize and to optimize this purification process specifically for treating recycled battery material, either production scrap or end-of-life battery black mass material. And our ultimate objective through this process is to be able to combine our natural spherical graphite on a purified basis from a facility such as that here in Western Australia with our recovered carbon anode material from the recycling arms of our business in order to provide a uniquely blended product for battery and car manufacturers. Next slide, please. So the third pillar to our business is the natural graphite business. And there we have a portfolio including the development-ready Apunko graphite mine. So we've spent something like $20 million US dollars completing a bankable feasibility study over the last 5 years. We've had that study independently reviewed by SRK Consulting on behalf of KfW IPEX Bank, which is Germany's state-owned government development bank and one of the largest development financiers in the world. And in turn, we've had a granted mining license. We've completed obviously our studies and engineering works, our pre-construction arrangements, and importantly, the work that SRK undertook confirmed that our bankable feasibility study satisfied the Equator Principles development model. Importantly, the IFC performance standards and the World Bank Group standards as they relate to environmental health and safety guidelines. And those are critical aspects in terms of securing European sales and financing support. Our plan is to initially start at 60,000 tonnes per annum production, and we've already been planning a low-cost expansion to that facility in order to meet growing market demand. We've entered into sales arrangements on a long-term basis with ThyssenKrupp in Germany and Sojitz Corporation in Japan for offtake from that operation. And its capital cost is just under 90 million, of which we're in the advanced stages of negotiating a 60 million debt facility with KfW at the moment. And you can see the economic returns there as well. Next slide, please. So Apunco is a key part of our ESG supply chain assurance for customers. Tanzania is ideally located from a transport perspective in terms of supplying product into Europe. And we've been getting extensive government support from both Australia and Germany to help support not only Australian export and establishment of a battery minerals processing capability, but also the industrialisation plans in Tanzania, where this project alone will operate for 40 to 50 years and in that time contribute something like $3 billion to the Tanzanian economy. So we have developed a $60 million debt financing proposal in conjunction with KfW. We have presented that to the Tanzanian government and more recently had a number of conversations with the government and received very positive response from the Tanzanian government-owned TIB Development Bank, which is the development banking arm of the Tanzanian government. That response was just received and provides the pathway for us now to proceed to work with the government of Tanzania, KfW as well, in order to finalise the debt financing arrangements, which would pave the way for the construction of this new mining operation in Tanzania. Next slide, please. So we have a very global strategy. Currently, all of the battery graphite is produced in China, and what we're presenting is a unique alternative to that supply, where we see battery manufacturers and electric vehicle manufacturers looking to diversify supply and to increase the sustainability of that supply. So we think the initial purification facility here in Western Australia is ideally positioned in terms of receiving feedstock from East Africa, processing that material, and then exporting finished products into the existing battery market of North Asia. And in time, we see the establishment of our second facility in Europe as that battery market is established. And in the medium term, we're also undertaking activities to establish a third facility in North America as that battery market grows as well. Next slide, please. So the value proposition is compelling for EcoGraf. We are uniquely positioned to provide an alternative to the existing supply of battery graphite materials in a high growth lithium battery market. There are three key components to our business: the EcoGraf graphite manufacturing facility that we have planned for construction here in Western Australia, the Graphite operation in Tanzania, where we're finalising the debt financing arrangements, and the recycling operations, where we look to value add to our graphite manufacturing capability. And all of that uniquely positions us for a long-term position as a significant and highly profitable supplier to this high growth sector. Thanks very much for your interest in our company, and back to you, Tim.
Thank you, Howard. We're out of time. We've got time for one quick question. What role does graphite play in, the Prime Minister has this critical minerals ranking. What role does graphite play in that?
Yeah, a very critical role, actually, Tim. We've been working quite extensively with the Critical Minerals Facilitation Office, and it's no secret, obviously, that being granted major project facilitation status was a key part of the government's recognition that graphite is an important part of the battery. There is potential for graphite production within Australia. We are in discussion with some parties around potential supply of graphite feedstock from Australia. And obviously in our conversations, we're very open to working with parties in Australia to help promote Australia's position in the global lithium battery market.